welcome to readtheticker.com. We're going to add a new section to our video series called Chart Review, where we're just going to shoot the breeze and talk about some charts that have some positive action on it, something that looks tradable. So every now and then I'm going to do a chart review and show off what we do at readtheticker.com using the names of Wyckoff, Livermore, Hurst and Gann. Well, you've heard about the gold stocks moving, haven't you? They went from a slumber to an exploded upwards. In front of me we have Newmont Mining Corp. I have my bullish RTT steps, and as you can see, the RTT bullish steps start looking that attractive until suddenly they break up and we start to form a step, and we currently have a bit of a pullback. So what we can see here, we've obviously got this activity here. You can see between that box there and that box here that the volume in this box looks a lot higher than the volume in that box, and that's a damn good sign from a Wyckoff logic point of view. We're down here, we have our price momentum, which is a pure price oscillator. So there's no volume interaction with that. That shows it's obviously the price is sunk hard. But this indicator here that I'm looking at, this here's the RTT trend, RTT OBV trend month with a 3 EMA. Now what this does, this is like you're monitoring a heavyweight boxing match and you want to see for each price bar how hard that price bar hits the chart, how much damage it does it do, how much volume behind it. So you're scoring how much the price bars do damage. So for example, like in the Richard Ney logic, how we talk about follow the footsteps of the big guys and see what the big guys are doing. This is my Richard Ney sort of indicator. For example, I've got a neutral pattern there where I'm saying, well, nothing much is happening, and that's because we've got a little sideways action. The volume is going nowhere, the closes are close. We've got a punch out here. As you can see, the bars are, this is a monthly chart by the way, this is the high close and strong blue bars with very little down bars. As you can see, and volume is strong there. So you can see here that the first move up is very strong, and so that bar there, we'll just put the, that gets a big hit. Another punch there. Right? So on those blue lines is where the close are. So you can sort of see here how strong the volume is, how much effect is that little bit of volume there is a little bit less than that one, that's why it's strong. So you can sort of get a feel how hard the box is hitting that bag, or as Richard Ney would sort of say, follow the big boys and see what they're doing. Look at the footprints. Then we have a little correction here, and we get a bit of a slump here. There's something interesting about this down bar. See how this down bar here, these two down bar here, this down bar equals this up bar. So the damage hasn't been that great. It's been a downswing. So if this is a very bullish indicator. We've had a downswing, a very strong bar here. If there's no technical damage done from now on, between here and there, then that down bar is most likely buying rather than selling. So long as the damage does not get too dangerous, so we end up a bit of a sideways actions between here, you're going to find that this is going to bounce back strong. And the story goes like this. Well, this broke out for 20 bucks. This is Newmont Mining is high volume stocks that attracts the institutions. There's not a lot of stocks that the institutions get into in a gold stock rally. So, and a lot of them have to wait till it actually moves before they can get in. So we had this sort of shock move that woke everybody up. The institutions want to get in, so what are they got to do? They've got to slow the move down, so they sell into it, and then they start accumulating on the dip. So depending on how much stock float they want to accumulate, this correction can actually go on for some time, 3 to 5, 6 months, even a year. Let's hope there's not too much damage. The RTT steps should hold at 30, and 3 zeros is a big fat round number that the market participants or market makers probably do not want to break on the NEM, so they sort of say, oh, here's break of 30, it might damage the chart too much. Let's just see how the 3 zero holds on the Newmont Mining. I would be looking at this. This is quite bullish. Anything else we can get from there? Oh, here's the daily. This here we have the daily chart within the RTT month step. So the RTT month step is 2.14, 2.5 balls. So you can see the interaction. So it's quite noisy, volatile. That's why you can look at the monthly chart. And here are the monthly big fat monthly chart bars I've drawn in the background there, so you can see what's going on there. Now we do have the FOMC coming up, so my guess that it'll probably Well, let's have a look. Interest rates have already moved, so we're going to move up and follow the market. So the market's already tightened. So my guess is that they'll be very nervous. They might say one and done, or they might just jawbone and say, let's see what happens in the first 6 months of the Trump what do you call it, term. My guess is also that they, you got trillions of dollars worth of debt, and they don't really want to pay that much interest, so they'll probably keep the rate low for a lot longer, which is all bullish. Okay, just looking at trend tools. This here, once again, is the RTT trend month, but on a daily chart showing the close-up view. So yeah, if you're a player, have a look at this. Maybe sell some puts, spreads, what have you. What's the option volatility looking like? Oh, here we are. It's 40%. So that's pretty healthy implied volatility. So that's good for going hunting for premiums. The other one we'll have a look at today. We'll have a look at it. I think we'll have a look at the silver ETF. What we're actually looking at using here, I'm using the RTT Swing pop-out chart tool. Now this tool is pretty much customized charts. You design your own chart templates and you load them in there. Which is good. So here we have SLV. Now SLV is an ETF, so the volume is an ETF style. Not the same as a stock volume. A stock volume has a limited amount of shares, so the ETF volume can go up and down depending on how many bloody derivative contracts they write. So the volume can explode from 1,000 to 1 million overnight, just based on how many derivative contracts are written to support the ETF. Whereas if it's in a stock, there's a certain amount of stock on issuance, so it's sort of controlled. Short point is ETF volume is different from stock volume. Index volume is different from stock volume and ETF volume. Just have to be aware of that. Right, let's move on. So once again, we've got SLV breaking out for a bit of a downtrend. You can see the steps are starting to work here. It's holding above the 15, which is the big fat number that traders are holding above for support. Yep, we've got a bit of a step up here. Volume has pushed it down a bit. We're starting to pat out. Just like Newmont, we want that volume there to hold, to show it is buying. So there's no more damage to the chart. And we do know this. I think everybody knows, if you've ever been in the silver market, know those are pretty much paper pushing down. As the same story goes, this went up too fast. The institutions couldn't get in, and they want to accumulate it, get out of their shorts, and get into the long side. And I believe the FOMC will be a deciding factor this week, so I'll watch that. And I also think the next 6 months would probably be bullish for gold and silver. But after maybe a plateau over Christmas, because all the good news is going to come out of the Dow Jones breaking 21,000 or getting close to 21,000, and it's going to be a high turnout on that index, so all the money managers can bank their bonuses. But that's the trend for Christmas trend. That'll be over. Then they're going to have to move into something else. Because I do believe reality will hit the stock market run based on bank stocks and the idea that Dodd-Frank's going to be a good turn. So Dodd-Frank changes will be good for the banks. They don't even know. I mean, they're just pumping it up on hope. And they might even bring back Glass-Steagall and separate out the trading and the bank deposits. So I wouldn't get too carried away in the bank stocks. Quite frankly, anything that gets pumped up too fast, Richard says, watch out, it's ideal for shorting. Which is pretty much what happened here. Remember, this was pumped up too fast. The shorts came in and just slowed it down. So yeah, watch Newmont mining. Have a look at silver and beware of anything that goes up too fast. And that's looking like the market as a whole. This is a chart review. Thanks very much for watching.